Welcome to another video by the Trader Guy at thetraderguy.com, and the chart in front of you is a weekly chart. All of the charts that I'm about to go through are weekly, and I like to do this at the end of every week over the weekend because quite frankly the markets are quiet, and it gives me some time to kind of really start to look around to see what is going on. I find that one of the best things that I've ever done as far as routine wise, ritual wise for my trading has been to start to look at various markets and see if I can see some type of pattern. And I actually have picked up on that this weekend. And the first chart in front of you is the weekly Euro US dollar. And what caught my attention is that it seems like no matter what we do, there's this little pierce right here, but beyond that, we've got this kind of flag-like looking pattern. And I thought, sort of thinking about it, thinking, with all of the problems in Europe, is this really possible? And I mean, everybody knows about the debt crisis and the banking and the bonds in Italy, the bonds in Spain, and everything else. And you look at something like this and you think, is it really possible that the U.S. dollar might be able to, or might get beat up by the euro? So while this chart in and of itself, to me, isn't worth trading because there's just simply too much headline risk, it did get me kind of searching around and looking through other pairs to see if I found some kind of common theme, and I did, and I found it very quickly. I found actually it was kind of surprising. So this could be a flag. I'm of the thought basically that if we get above about here, which is about 145. If we can get above that on a daily close, then as far as I'm concerned, this is a flag that has broken to the upside and will head to 165 before it's all said and done. I don't like trading this pair because of the headline risk, and quite frankly, it's basically a battle between the two ugliest sisters at the dance, so to speak. And because of that, I'm not necessarily trading this, but I started looking at this flag, and like I said, it got me thinking about the dollar. Is the dollar really in that much trouble? So as I started looking around on the weekly charts, the Australian dollar versus U.S. dollar on the weekly chart, you can see it's a beautiful, absolutely beautiful hammer. It's right about where you want to see it, and it does look very bullish at this point. I mean, the Aussie dollar has been very bullish for quite some time. But as you can see, I mean, this is an absolutely beautiful signal. If we can break the top, we probably will head back towards the break the top of previous week. We probably will head back towards the 110 mark, which is quite a ways from here. This is a very, very interesting setup because of the long-term bullishness and the fact that it does follow gold, which gold is doing something very similar at this moment in time. So it does look like the dollar may be in trouble against the Australian dollar. Looking at the Kiwi dollar, same exact story. Basically, we have an area. I do have 85 right above this as a psychological area that could perhaps we could perhaps trigger longs and then get a little bit of a pullback there. But I mean, you just cannot deny the fact that 80 held, like a rock. So that looks very bullish as well too. And certainly, again, the trend is without a doubt up. So it looks like the Antipodean currencies at least are going to do well against the dollar this coming week, assuming, as usual, that all of these buy signals get triggered. But one can only see which way the market's leaning, and that's really what this video is about. When you look at dollar Canada, you can see very similar circumstance. We've got parity right here, and it just stopped on a dime, really, right at parity, and it looks like we're heading back towards the lows, which are about 94.50. And certainly that is not out of the question. I mean, it's definitely a downtrend. Quick and dirty, you can probably make a little bit of a trend line somewhere in this neighborhood here that we broke through, and then got a little bit of a false breakout, I suppose. It's a little bit of a stretch, but it's just another reason why you could think of that. Plus, if you look at the oil markets like the CL or the coil contract, both look very bullish suddenly after they just fell out of bed for several days in a row and then bounced like you wouldn't believe. So then the real question becomes, is oil going to start taking off? If it does, naturally the Canadian dollar follows it. But when you look at charts like this, it's with the trend, and all of these moves would be with the overall trend. It does start to kind of add up and you start to get a picture of exactly how on the back foot the dollar really could be. This is a pair that you've never seen me talk about. This is the dollar versus the Israeli shekel weekly chart, and lo and behold, it's the same story. It's in a downtrend. It forms a beautiful shooting star on the weekly, right into support and resistance. I haven't really drilled down to find out exactly what level we're talking here, but quick and dirty would call it 3.5. It just looks to me like when you start pulling up pairs like the USD ILS, that tells me that there's dollar. This isn't a pro Aussie. This isn't a pro Kiwi. This isn't a pro Euro move. This isn't even a pro CAD move. This is an anti USD move. So more than likely, you're going to find that the dollar is going to struggle against most pairs or most currencies. Looking at the dollar against the Swedish krona, it's a very similar story. A little bit less attractive as far as the shooting star aspect. It is technically a shooting star, but with the Swedish krona, we're also looking at a potential flag there as well, a bearish flag. So when you add this all up, this really looks more like an anti-dollar play. There is a Fed meeting, and there will be some type of statement later this week. The day escapes me, but obviously you know how to find that out just looking at the calendars. And as such, it tells me that I think the market is starting to anticipate QE3. So there's a couple different things that could come out of this. Either the dollar gets killed off because they do QE3, and let's face it, unfortunately, the U.S. has a Federal Reserve chairman who that's pretty much all he knows how to do. Is debase the currency. That's the only solution, it seems. So, having said that, they'll find a way to do a QE3, maybe through a backdoor thing. There's some interesting things over the weekend that I've read in different places. Zero Hedge was one of them. Great blog that was talking about how they would do some maybe backdoor QE3. It won't be quite throwing money out of the helicopter, so to speak, as they've done in the past, because it's obviously failed, and it does drive up inflation in certain commodities. You start printing more dollars, then the price of oil goes higher. For example, people want tangible products. So, having said all of that, it's very likely that we'll see some other oddball form of QE3, and I think the market's starting to price it in. If something happens during the Fed meeting and they happen to make it abundantly clear that they will not be easing their monetary policy in any way, shape, or form, then you could see all of these moves get reversed in a heartbeat. And then you've got broken shooting stars and hammers everywhere, and those are excellent signs in and of themselves. So in going through my charts over the weekend, I started to see a pattern over and over and over again. And I did a video not too long ago about the franc that was similar. And every once in a while, this market will show you where it's leaning if you look hard enough. You have to look around and see, pick a currency. So, for example, if you're interested in trading, I don't know, the New Zealand dollar, and compare it against the dollar, the yen, the franc, the Aussie, the pound, everything else, and if you start to see the same signal over and over again, it's a pretty strong signal. So it looks like this week going forward, we could have some real dollar weakness. And if that's the case, that really gets you leaning in certain directions. Personally, I'm staying out of the Euro US dollar unless we close above 145. Then I might pay up a little bit for it, but I really think that 165 is the ultimate destination based upon that flag. So certainly I can give up, maybe 100 pips or whatever to pick up, the 2,000 or so that could be coming out of it. But having said that, I see plenty of really nice charts. The Israeli shekel is a nice chart. The Kiwi and the Aussie, the Canadian dollar even, are all nice charts. So, having said that, it looks like the dollar is going to get punished this coming week, and that is what I'm watching for. My suspicion is if one of these signals gets triggered, they probably all will, pretty much simultaneously. So, having said all that, it'll be very interesting to see this week coming up. But this is what I do on the weekends. I spend about an hour. I look through all my charts and I figure if there's any signal that the market's showing me in several different directions. And it appears that it is this week. It's wanting to sell the U.S. dollar off. Got any questions? You can email me at chris@thetraderguy.com. Thanks, guys.